Well, buying a home is one of the most stressful events many people ever experience, and one of the biggest contributors to that stress is the process of getting approved for a mortgage.
Yeah, here to share his tips to avoid mortgage mistakes is CEO of the Bizarro Agency, Matthew Bizarro. Nice to have you with us again. Welcome back.
Oh, it's always an honor to be here.
So, Matthew, let me ask you this. Can you, first of all, explain to people who may not know what makes buying a home just so very stressful?
Absolutely. It can be incredibly stressful. One study found that half of recent homebuyers cried at least once during the experience. Another survey revealed 40% of new owners viewed home buying as more stressful than looking for a job. So mortgages are a huge part of that stress. Qualifying for them, timing it right, and even just knowing you're responsible for a huge payment every month for decades, it all adds up to a great tension. And that's if you do it right. But if you make mistakes, the stress skyrockets.
Okay, so speaking of mortgages, what are some of the most common mortgage mistakes?
So the first mistake is not getting a pre-approval. Buyers often think they can make an offer on a home and then go to the bank and get a mortgage. A pre-approval displays that your bank has already verified your income, reviewed your finances, and decided they'll give you a loan. In other words, it's proof you can pay for the home. And without that proof, your offer is meaningless. And the reality is, if you aren't a cash buyer, you need a pre-approval letter, or the sellers won't entertain your offer. In fact, it's become increasingly common for listing agents to not even show a home without a pre-approval letter. And the second most common mistake is getting pre-qualified for a mortgage rather than pre-approved and thinking they're the same thing. While that might sound nitpicky, the difference, as we just discussed, is a pre-approval means the bank has gone over your finances, verified your credit score, and is willing to lend you the money based on your ability to repay the loan. A pre-qualification just means you told the bank what your financial situation is, and the bank said you could get a loan if what you told them is true. But the bank hasn't verified any income you provided or any information. So any experienced listing agent knows that a pre-qualification doesn't mean you'll be able to get a loan, and most won't accept an offer with a pre-qual letter. A pre-approval is a much more credible way to show sellers you're able to get a loan.
Okay. There's a lot there. Let me ask you this.
That was a lot.
It's okay. People want to know this. What mistake can I avoid so it doesn't cost me money? I mean, that's the bottom line. There are a lot of mistakes out there that you can avoid.
Absolutely, and that's our job, is to save you money. And the top one that I see where people could save a ton of money is pre-approval shopping and buyers obtaining multiple pre-approvals with several different banks. Now, don't get me wrong, shopping for a better rate is good, but not at the pre-approval stage. When you apply for a pre-approval, the bank runs your credit, and every credit pull can drop your credit 3 to 5 points. So for example, if you go to 10 different banks, you could end up lowering your credit score by as much as 50 points, and that could affect the interest rate that the bank gives you.
Okay, so can mortgage pre-approvals, you say it's best to be pre-approved, can they expire, and then what will happen?
Yes, so they do expire, and that's another mistake, is locking the rate too early. So especially now with the government raising interest rates every month or so, there's a major temptation to lock in your interest rate as soon as possible before it goes up. But locking in your rate too soon can actually cost you a lot of money. Rate locks expire between 2 and 4 months after you get them. So finding a home and entering into contract, that takes time. And even with regular condos or houses, it can take several months to complete the process. But if you're buying a co-op, it'll take even longer because you have to go through the building's approval. It's very easy for this process to take longer than your interest rate lasts, so your rate will expire. And after it expires, then the bank will charge you a fee. And that can be as much as $200 a day.
Wow.
So at the Bizarro Agency, we advise our clients not to lock the rate until they have an executed contract, because any earlier, and the odds are that the lock will expire and it'll cost you money.
Let me ask you a question. Is there a downside to playing the waiting game? Because it sounds like it is a bit of a gamble, huh?
It is a bit of a gamble. If you manage to find a home and execute a contract in 90 days or so, and you didn't rate lock at the beginning, you could find you're paying slightly more and end up paying a tad more every month. But there's also the chance the rate could go down a tad. But however, it's extremely rare to find a home and get through the contract phase in such a short time. So meanwhile, your clock on the rate is ticking and you don't have anything to buy. So by the time you find something to buy, your rate's going to expire and the bank will rake you over the coals for extension fees, or you're simply just going to have to go to another bank.
All right, a lot to ingest there, but Matthew, thank you so much for joining us today.
You're welcome. Have a great day.
All right, you too. For more information on mortgage mistakes or get in touch with Matthew, go to bizarroagency.com.